In this episode of the Should I Buy It show, I'm talking about the stock market. Is it crashing and should we buy it? Stay tuned.
3 separate devices. This is one device.
Associate with people who are better than yourself and act.
I'm going to make him an offer again.
Hey everybody, I'm Sam and this is Entiversal. You're watching an episode of the Should I Buy It show where we discuss a lot of different investment opportunities, trying to see where the value is. That could be in technology, innovations, or as today, the stock market. And the stock market, if you've been following it, in the last around 10 days were really rough, and we can see the graph here of the S&P 500 index. It's down 11.6%. It is in the serious correction territory. So today we want to talk about is the stock market crashing? Is it just a healthy correction? And is there value in it? And from my point of view, should I buy more or should I stay on the sidelines? And first of all, I want to say that while we will look at some facts, obviously everything is just my point of view. And if you would like to follow more on my financial education playlist and a lot of talks on different stocks, previous episode of the Should I Buy It show, take a look on the top right of your screen in the card section where the playlist will be linked. So as we saw, I'm looking at the US market at the moment because obviously United States has the biggest economy, and actually US started this correction which basically spread to Asia, to Europe, and basically in the last week all around the world the stock market has been down, but obviously in the US it's most representative. And as we saw, S&P over 11% down in the last 10 days. That's Nasdaq, so that's tech heavy, over 9% down. Dow Jones, which are basically the biggest company, some of the biggest companies out there, especially industrial and some technology, is 11.8% down, which is really interesting because the safest stocks, which are in Dow Jones, actually down most, which means that yes, we have a big correction. But if I actually make the chart on the 5 years, we can see that yes, it's a really sharp decline, but from the last meaningful correction, the stock market, especially S&P 500, was over 54% up, okay? And let's look at the Nasdaq. Since the last meaningful correction, it has been over 73% up, okay? Dow Jones has been over 66% up. Those are crazy numbers, and that's all in the span of under 2 years. So all of the indexes are around 55 to 70% up. So obviously that would grant a healthy correction. So a correction was already overdue because the stocks were just doing incredible in the last year and in 2016 too. And that is more of a psychological barrier, because when something goes up, in the mind of investor, basically the worry grows. So the bigger the rise it is, that could cause a bigger correction that is coming, right? Because more people think that the correction that would come would be bigger. So it's like a psychological thing of a predestination, which is why it's better to have a correction now and not after another 50% up in the market, because the following correction would be much bigger, and obviously the potential of losing more money would be bigger also. So first of all, yes, correction was overdue. But second of all, why is the correction actually happening at the moment? And I have here an article. Basically, a surprising jump in the US wage gains intensified concerns about inflation and the likelihood of a more aggressive Federal Reserve. This week's congressional budget deal that boosts federal spending sharply on the heels of the big Trump tax cuts pushed the 10-year Treasury yields to a 4-year high. So what does that mean? Means that investors are worried, there is fear that rising wages will actually make the companies earn less in the future, and also that could signal for higher inflation, which means that the Federal Reserve would pick up rates higher, which makes harder for business to borrow money from banks, so they borrow less money, which means less growth. But I want to stress that it is just fear. At the moment, fundamentals of the company and of the economy are very strong, and they are as strong as last year, right? So all of this correction is on the base of fear, and that's fear from a single report. And a single report is not descriptive. Even if those things are happening at the moment, as of fundamentals, the companies are earning more than ever before, and they have very, very strong growth. And at the moment we're at earnings season, and most companies are killing it. So that's why I would say that yes, this downtrend looks very sharp and scary, but I would say it is a healthy correction. Now it's already like 11 or 12% down. Could it go down more to 15? I don't know, maybe more. Absolutely it can. Okay, I cannot predict how much would it go down, but as I stressed, at the moment there isn't anything scary as the fundamentals in the market, which means that stocks overall now become much cheaper because fundamentals, earnings growth is there, but at the same time their prices are going down, which for me means buy. And obviously you can always try and time, because now basically the stock market is in free fall. In order to see like meaningful bottom and start of an uptrend, we need to see like maybe a few days of uptrend with big volumes, all the indexes, S&P 500, Nasdaq, Dow Jones being in the green, as I said, with big volumes, maybe a few bounces off the bottom or something like that, and then maybe a good time to buy. But at the same time, I'm not big on timing because I'm investing long term, which means that if we spread that to maximum, you can see that even if you bought at the absolute peak before the 2008 crash, which was a crash and it was a fundamentals crash in the market, you'll be still making a lot of money today. And at the moment, we are already on a 12% down. So even if I say a crash is coming, we're probably somewhere on the downtrend, right? Which means that buying here would still give me profit. So that's why I say overall companies at the moment are getting cheaper. There isn't a fundamental shift that is worrying me, and the correction was long overdue and it was sparkled by fear. As I see it, it's very healthy. Obviously things can change, but then I wouldn't really want to time the market. So my verdict is yes, I would buy the stock market today because it's cheaper than 2 weeks ago, and that's that. I hope you enjoyed this video and hopefully ease your concerns a bit. Obviously that's just my opinion. Check up the other videos of Entiversal. We have success mindset, we have financial education, we have science and technology, we have entertainment. Enjoy, it's all for you, and stay Entiversal on the path to greatness.